Hello, my name's Rachel and welcome back to my channel. So in today's video, I wanted to talk you through 3 ETFs that I will be buying in my investment ISA. So I wanted to include these ETFs or index funds specifically in this video because they are not your standard Vanguard VWRL or Vanguard VUSA. They're a little bit more unusual. They've had some really strong returns. However, the fees are really low, as you would expect from index funds. So all 3 of these investments have fees of less than 0.2%, but some really strong returns. So I was keen to add some more index funds or ETFs to my portfolio this year because I have got a portfolio that I felt was a little bit heavy on actively managed funds. I'll still be holding on to some of those actively managed funds, but I was actively trying to add in some ETFs. So these are the ones that I have selected. So the ETF providers are iShares and then also Vanguard. So I'm going to start with an iShares one, then put Vanguard in the middle of the sandwich, and then move back to another iShares one. So the first ETF that I will be adding to my portfolio is the iShares MSCI USA SRI UCITS ETF. So that's quite a mouthful in itself, but I was really impressed by this ETF. The fees for it are 0.2%. It has 134 holdings within its portfolio, so quite concentrated despite being an ETF. 3-year annualised returns of 22.50% and 5-year annualised returns of 17.32%. So really strong returns. So I would absolutely love to see a return of 22% in my investment ISA per year. However, obviously past performance isn't always indicative of future performance. Now, what I really liked about this ETF specifically is that it is an SRI, which stands for Socially Responsible Investing. So the investment objective of this fund is to provide investors with a total return taking into account both capital and income returns, which reflects the return of the MSCI USA SRI Select Reduced Fossil Fuel Index. So that is also a driver as to why I've decided to invest in this ETF, as well as its really strong returns. So let's move on to the Vanguard ETF. So Vanguard are really well known for providing incredible ETFs and index funds, and they are very popular, with most people having, for example, the S&P 500 or Vanguard's VWRL within their portfolio. But this one was a little bit different. This is Vanguard's FTSE Developed World excluding UK Equity Index Fund. Another mouthful. The fees for it are 0.14% and it has 2,095 holdings within it. 3-year annualised returns are 16.20% and 5-year annualised returns are 12.18%. So really good, solid returns. For my investment portfolio, I was hoping to achieve returns of at least 12% a year, hopefully over a 3-year annualised period. Let's see if that's possible. So I did want to include this investment because, as I said, it has seen returns of 12.18% as 5-year annualised returns. So I'm hoping it can continue to do that. Who knows if that is possible. So those fees are the lowest of the 3 investments that I am including in this video. So that's a real positive. Now you can actually just buy the Vanguard FTSE Developed World and include the UK equity within that. The historic returns for that haven't been quite as strong. They're still very good, but I decided to go with the version which excluded the UK because I do have some UK specific investments already within my portfolio. I actually have an actively managed fund that covers the UK that I have been very impressed with, so I didn't want to have the UK within this Vanguard index fund. So that is why I have chosen that option, but just to say you can obviously go with the Vanguard FTSE Developed World as a whole without excluding the UK if you wanted to. So just to say, I've popped all of the information for all of these ETFs and index funds in the description box down below in case you want to check them out in a little bit more detail. Okay, so finally we are moving back onto an iShares ETF, and that ETF is the iShares S&P 500. That's not it. iShares S&P 500 information technology sector. So this is not simply an S&P 500 index tracker, it is tracking the S&P 500 but the information technology sector. So rather than having those 500 holdings of the top US companies, it actually only has 76 holdings. Now I am currently invested in an actively managed fund which focuses on the tech sector, and the fees are much higher than this. So the fees are just over 1% for that investment, whereas for this investment the fees are only 0.15%, and the returns have been staggering. So 3-year annualized returns for this ETF are 33.51% and 5-year annualized returns are 26.24%. So really strong returns. Obviously the tech sector has been hit quite hard in the last few weeks, as have growth stocks. So I'm thinking that this might be a good time for me to buy this investment. However, I'm not attempting to buy the dip or anything like that or time the market. It is just a time for me to rebalance my portfolio. I don't know what the market's going to do. It might drop even further or it might rebound. Who knows? So this for me is a good investment to be making right now. And as I said, rather than focusing on the S&P 500 as a whole, I really like that you can select within this ETF the information technology sector. So that is what I am deciding to do. So those are the 3 ETFs that I will be adding to my investment portfolio within my investment ISA, because that is the best way for me personally to invest in a tax efficient way. So yeah, if you have any questions, please do pop them in the comments down below. If you fancy subscribing, I will be sharing exactly what I'm doing with my investment ISA this year on this channel. So please do subscribe and like this video too if you fancy it. Thank you so much for watching and have a really lovely day. Bye bye.